It's shaping up to be a fairly disappointing finish to the week on our market today after a surprise jump in US weekly unemployment claims and a collapse in Philadelphia region manufacturing activity reignited fears that the US economy could slip back into recession and provoked a sharp sell-off on overseas markets last night. An hour into trade, the ASX 200 is 42 points or 1% lower for the session, with all sectors losing significant ground in response to last night's sell-off and also as uncertainty surrounding the Australian federal election weighs on sentiment. One notable exception, however, is the ANZ, which is up over 1% at 22.65 after the company announced an impressive 37% jump in cash profits to $1.3 billion for the third quarter, driven primarily by a decrease in bad debt charges. The bank also said its Australian mortgage lending business grew at 1.7 times the pace of the overall market, suggesting it is winning market share, and its results were also boosted by the acquisition of ING Australia. However, like its competitors, the ANZ warned that borrowing costs are permanently higher in the wake of the GFC, suggesting that interest rate hikes independent of the RBA could be on the cards after the federal election. Meanwhile, shares in global surfwear retailer Billabong have plunged nearly 10% to $8.03, despite the company reporting a slightly better than forecast $146 million full-year profit. The company noted a sharp deterioration in Australian sales late in the period and tipped only 2 to 8% growth for 2011, way below the 20% plus growth analysts had been expecting. Finally, on the currency front, the Australian dollar has continued to drift lower in overnight trading and is currently buying 89.03 US cents. This is Mark Potter for Young Stockbrokers.